Okay, it's the 19th of March. It's a Wednesday. We've got about 30 minutes to the NY Open. We're going to get to the charts in a second. Yeah, just check. Everything's good here. Yeah, we're all good. Okay. Okay. All right, let's start with the calendar. Okay, so first half of the NY session, there is nothing, but the second half of the NY session, close to the, around, what time is it now? Yeah, about 6.5 hours from now, we have um, we have the interest rate decision, right? And then 30 minutes after that is the FOMC statement or the meeting minutes. Okay, so those two events, 30 minutes apart, brings in volume into the market, right? Not just volume, it brings in direction as well, right? At least for uh, maybe the next day or two, it'll bring in direction, or maybe even more, right? So it's not just volume, it brings in direction. So the market might be quiet until then. We might not have much volume until then, but let's see. Let's look at the charts and see what we have. Um, yeah. All right. On the daily, yesterday price tapped 3,000 and pushed towards, is heading towards 3,050, right? That was the anticipated move. We said price is very bullish. There was no pullback, in fact, during the NY session to get in on a trade, to get in on that move, probably because of what's happening today, probably because of the news events today, right? Just give me a second. Just give me a second. I'll be back in 2 minutes. Sorry about that. Had to sort out the kids. All right. So on the daily, what I was saying was we tapped 3,000 yesterday. I think that happened during the Asian session or the London session. We'll have a look at that later. But in the NY session, the first 2-3 hours of the NY session, there was no pullback to get in on the buys to head towards 3,050. But that's very likely where we're heading to, right? We have closed a strong bullish candle above 3,000, and we're just about 100 pips away, right? So we should get there pretty easily, unless there is some sort of price ranges here until news, and then we have a pullback, a fairly large pullback, a larger retracement, and then we head higher later on. But that'll happen only after news, and news is about 6 hours from now, right? So there's a long time for that. Let's go to our trading chart. Okay, so before we draw our zones, as usual, I do a recap of the trade idea that I gave yesterday. So the trade idea that I gave yesterday was only buys. There were no sell ideas. It was only buys, and I said wait for 30-minute support to form with a tradable 30-minute candle. So this was the 30-minute support, and it's a tradable 30-minute candle. Unfortunately, there was not enough of pullback for me, but if you want to take a trade from here, you could have. And if you put your stop loss under that 30-minute candle low, because that's where you should have put your stop loss, under the 30-minute candle low that created support. Then price did run eventually in the Asian session today. We ran about 150 pips, right? But there was no trade for me because this pullback here wasn't enough. I want to enter between in this area, in this zone. That's the zone that I want to enter in. Ideally, at the optimal entry around 3027.5. But if not that, then at least a little higher, higher than that. It has to be below this line. For me, it has to be below because that's how I draw my fib. So basically, after 30-minute support is formed, I go down to so this candle closed at 1830. It's opened at 100 IC market server time and closed at 1830. So if you go down to the 15-minute time frame, and then this was the candle. This candle broke this. This was the recent break. This one broke this low, and this one broke this low. So the fib is drawn from the high of this candle to the low of this candle, and then but this was the close of the candle, right? So this wick didn't pull back enough for me to get in on the trade. It did in the Asian session. It was a perfect entry in the Asian session if you placed a pending order there, but I don't do that. I don't place pending orders overnight. So, but if you did, if I did, or if anyone did, then this was a perfect entry. Tapped the optimal entry 3027.46 and went straight up after that. Went up 175 pips, 180 pips from there, right? But there was no trade for me yesterday. So let's get rid of all of these. Okay. Okay, let's start with supply. There is a rally and there is a drop here, right? There's a straight candle going straight up and a candle going straight down. So there is 4-hour resistance there, and there is supply there. If anything, if it looks like supply, then I always say there is supply there. Okay, so there is supply there. We're going to take a look at it on the lower time frame. For now, let's just mark that out. Let's go down to the 1-hour time frame. Yeah, there you go. That's the base, right? So rally, base, and a drop. Yeah, on the 30-minute time frame, can bring it down here. Yeah, that might be better on the 30-minute time frame. Yeah, bring it down to this candle. So this rally, base, drop, right? So let's put the numbers here. 542, close 018. 542018. Okay. And the reason that is 4 hour supply, because it's visible on the 4 hour. Okay. Yeah. Now, in terms of demand, we have a drop here, just like we have a rally and a drop there. We have a drop here and a rally here. So there is demand there. In fact, this was the demand. The price has gone through it, right? Rally, 3 base-in candles and a rally. Rally, 3 base-in candles and a rally. Leg in, base, leg out. But price has come through that. So we're going to take a look at that area on the 1 hour because price has gone through that zone now. And we'll have to look at it on the 30 minutes because there is interesting. That's not a basing candle. Okay, so this is a reaction to this source. So on the 4 hour, it's not visible because we had a big push up yesterday without a pullback, right? If you remember yesterday, there was no pullback. We were waiting for a pullback during the first couple of hours of the NY Open. There was no pullback, and this was that 4 hour candle. So it moved straight up without a pullback. The next candle pulled back a bit, but this one didn't. So we'll have to go on to the 1 hour to look for that zone, and there is one here. There's a drop and a base and a rally. Can consider this as a base in candle as well, the rally, base, and then the rally, and this is a reaction to that. Let's go down to the 30-minute. We can refine it a bit. Yeah, that's it. Okay, that's a drop, base, 1, 2, 3, 4 base in candles and a rally. Okay, so this is a reaction to this source. This is the source of demand. On the 1 hour, it's basically a rally, 2 base in candles and a rally, or 3 base in candles and a rally, base, rally. On the 30-minute, we refined it, and this reaction here, price has reacted to this demand here. Right, so let's put the numbers there. This closes 457,813. 457,8. Okay, and the rest I'm going to extend the rest to the right. Yeah, extend the rest to the right. And the reason I'm extending this is because we have news today, so price can always pull back, right? Got to pull back or reverse. As I said, the news events, NFP, CPI, if the interest rates and the FOMC meeting minutes, these are 4 events that can reverse price, right? They can reverse price. Okay, that's good enough. We've covered about 600 pips to the downside. That's good enough. Okay, so we've got supply here, and we've got 1 hour demand here and 1 hour demand here. Extend this liquidity candle to the right. Do the same for this. Yeah, perfect. Okay, so the next thing is we're going to check if this is a high liquidity zone and if this has taken out anything to the left. Now there's nothing here far to the left. There's nothing to the far left. So it has to be the recent left. Has it taken out? So there is so when you are looking at all-time highs, you have to look at recent, if price has taken recent highs, right? Because there is nothing to the far left. There is no price action to the far left because we are at all-time highs. So there is a rally and a drop here. There is supply here. If you go down to the 30-minute time frame, you'll see it very clearly, right? This is that zone. You can see the rally, base, and a drop. Two candles drop, and price moved up, and the move up from here, this candle, specifically this candle, took out this high. So this is a high liquidity zone. Okay. Then we look at, let's take a closer look at this. Has this taken out? Yes, it has taken out this demand. There's a drop, two basin candles, and a rally. This move down has taken out this demand to the left. So this too is a high liquidity zone. Okay, perfect. Just clean up the chart a bit. I'm not entirely sure we'll get a move today because we might have a quiet first half of the NY session, a quiet, uh, possibly low volume trading. But we're going to draw our zones and be ready anyway because there's always things to learn. Always something to learn from the charts. Okay, so the next thing that I do is we have two new zones. This was drawn yesterday. That has a high liquidity candle already that we've identified yesterday. We have two new zones, two high liquidity zones. We're going to take a look at these zones and see if we have a high liquidity candle inside them. Okay, so we'll start at the 1 hour time frame. We'll start from supply because that's where price is very close to right now. It's close to supply. So I'm looking for the largest bearish candle in here. On the 1 hour, there is nothing right that I can see. On the 30-minute, we have this large candle here. That's a good sign. That's over 100 pip candle. Let's go down to the 15-minute, and we have this candle right here. Right, that's 80 pip candle. We're going to mark that candle. Right, 473679. 473679. Let's go down to the 5-minute time frame. Take a closer look at that. Yeah, that's good on the 15-minute. I don't think we need to because that's the largest candle and we've covered this as no top wick. Yeah, it's good enough on the 15-minute. Now, keep in mind prices come deep into it, right? If you look at it more carefully, prices come, that's the liquidity candle, we dropped, we came deep into it, right? So maybe we've consumed the liquidity in that candle. We've come all the way 70 pips into it. It's a 79 pip candle and we've come 72 pips into it, right? So we've come almost all the way through the candle, but we're still going to have that. That's the high liquidity candle. We're going to take a look at that candle. Let's maybe take a look at it on the 1 minute also. Just want to see if there was a large candle drop. No, this is the move. That is the move. That's the 50 pip. That's the bulk of the move down. Yeah. Yeah. 59 pip. Yeah, that's where we possibly could react to if we are to pull back. Or even it could be one of two scenarios. We either react to this and push down, or you have a scenario where price closes above and then closes back inside and pushes down. That's fine too. And retail traders call that a fake out, right? So you might have a candle that'll close outside the zone, close above it, and then a bearish candle closing back inside the zone. So we'll be watchful for either one of those two scenarios. Okay, let's take a look at demand right now and see what we have here. We're looking for the largest bullish candle. There's a big bullish candle here. Let's go to the 30-minute time frame. Still that candle. Let's go to the 62 pips. It's obviously larger. 15. 59. 55. This one right here. Let's take a look at the 5-minute time frame. So move up, pulled all the way down. Yeah, both these zones have been consumed. The liquidity in both these zones have been consumed, right? You can see this is the liquidity candle. Price went up, went right through it, and then pushed up. So we could break above this and we could break below this, right, to grab liquidity. Very possible. I'll repeat it again. The liquidity in both these liquidity candles, the liquidity at both these liquidity levels of these liquidity candles, this candle here and this candle here have been consumed. So we could break above it to grab liquidity to push down, or we could break below this candle to grab liquidity to push back up, right? That's something, if you are trading the interest rate decision or the FOMC meeting minutes later on in about 6 hours from now, then that's something that you want to keep in mind, what I just said. 3968. Okay, right, that's it. Now, yeah, we've still got some time. NY Open starts in about 7 minutes. NY Open is in about 7 minutes. But I always wait for the first 15-minute candle to close before I look for any setups, right? So I'll be back in a couple of minutes, and then we will look at what price has done in the Asian and London sessions. Hopefully that might give us an idea of what price could possibly do in the first couple of hours of the NY session. Okay, so yeah, so that's basically the zones. You can update your chart if this helps you, if this analysis helps you. That's on the 1 hour. This is what it looks like on the 1 hour. You can screenshot it, update it. This is what it looks like on the 30 minutes. Okay. Okay, I'll be back in a couple of minutes. All right, let's have a look at what price has done for the day so far. Okay, that's the market open right there. Here. So the market opened at 3034, right? Then we had a drop here. This is the Asian. Two seven four. Now, keep in mind, this analysis that I'm doing is valid um, until news today, right? This is not just for the couple of, it's not just for the first 2 hours of, or first 2 to 3 hours, and that goes for every day, right? It's valid throughout the entire NY session, the first half and the second half. Okay, all right. So in the Asian session, let's take a look at this. We moved about 115 pips, and in the London session, we had a massive move of 225 pips. So very similar to yesterday, very similar to yesterday in terms of movement, right? So that's exactly what we had done yesterday. Mm. And then we continued later in the latter half of the NY session, if you remember, in the second half of the NY session, we continued to push back up, right? So it was very similar to what we have today in terms of Asian and London volume. And then there was no pullback, but later on there was a pullback, and then price continued up, and we have a almost 400 pip candle here, 388 pip, 390 pip candle, right? We closed a 390 pip candle yesterday. So today, uh, it's very likely we're going to do more than 390 pips, right? Very, very likely. We've already done about 230 pips, 240 pips. It's, yeah, 226 pips today. We're going to do, we're very possibly going to do a lot more than that today, right? A lot more than a 250 pip candle, obviously. So what's happened? Let's just go through this. Okay, that's the market open. The market was bullish yesterday, right? Second half, the first half of the NY session and the second half, and even during the London sessions, price was just bullish, right? We just Asian, London, NY first half, NY second half, we were all bullish, right? So there was a lot of bullish volume. So the market opened here, right here at this candle. That's 1 a.m. IC markets server time, and then price pushed down to the EMAs to grab more liquidity to head up. And it did so. It grabbed liquidity, we created the Asian low, and we pushed up 180 pips in total, right? So we pushed up here, we created the Asian high, pulled back a little bit, and then tapped the Asian high again, immediately broke the next candle broke the high and continued higher, right? So we continued another 60 pips above the Asian high, right? So that was a total of 180 pips. Once we did that, we pushed down and we created a liquidity candle, which is this candle that we marked on the 15-minute time frame. We created a liquidity candle. That's a lot of volume uh, for price to push down, okay? And it created that volume because there's nothing to the left to grab volume, to grab liquidity from, right? We're at all-time highs. So the market created volume, bearish volume, a lot of bearish volume came in basically and created this liquidity candle. Price pushed down, came back, grab liquidity from the bearish volume, from the bearish liquidity, closed below the Asian high, pushed straight down to the Asian low. Straight push down to the Asian low, 117 pips push down, right? No pullback at all. This is during the London session, okay? So for those who are trading London session, this is a perfect trade to take. Once you see this liquidity candle created and price comes in, grabs liquidity, closes below the Asian high, then you're coming straight to the Asian low, right? That's an excellent trade to take to come down. And then we came and we grabbed liquidity from this liquidity candle, right, that we created yesterday on the way up. During the London session, we created this liquidity candle. Price came, grabbed liquidity from it, and closed above the Asian high. That's also in the London, so that's the end, towards the end of the first half of the London session, and closed above it and pushed straight up. So there is a lot of volume, pushed straight up to the Asian high. Once it closed above the Asian low, this candle closed above the Asian low. Let me zoom in. We closed above the Asian low, we pushed back up to the Asian high because that's the obvious place to go to. Once we close above a low, we're going back to the high, right? Now we're at the high and we've closed above it, no top wick. If we close back below, if we form 30-minute resistance, we have formed 30-minute resistance. Yeah, we have formed 30-minute resistance, right? If we have a tradable candle, a tradable 30-minute candle close, that's what I'm waiting for. If there's a tradable 30-minute candle that closes now here below the Asian low, then we can take a sell, we can take sells to come back down again, right? At least to maybe the EMA here, at least to around 3029, 3030, somewhere there, right? But we form resistance, but there is no tradable 30-minute candle yet. So we form resistance, but no tradable 30-minute candle. So that's what I want to see. A tradable 30-minute candle to take sells to come down, right? Now that might happen now, or it might take another couple of hours for it to happen, all right? But that's what I want to see, to take sells. Obviously no buys here because we are at supply and we are inside a high liquidity candle to sell. So obviously there are no buys at all. Right now there are no buys, but if price pulls back, maybe there will be buys. If price pulls back, creates 30-minute support, yes, we can take a trade to go up if we have a 30-minute tradable candle that creates support, or a 30-minute tradable bullish candle after we create support. But right now, in the current situation, sells, I'm looking to take sells, but I need to see a 30-minute tradable bearish candle to close below the Asian high for price to come back down. Okay, that's what I'm waiting for. Or price goes further up, rejects the London high, and then we get 30-minute resistance form again, and then we take a trade to come down, right? But it sells basically. So those are the two scenarios that I'm visualizing. Either we have a 30-minute tradable bearish candle that will close below the Asian high to take sells to come down, or price pushes further up and then rejects the London high, creates 30-minute resistance, and then a 30-minute tradable bearish candle to close up here to take sells to come down. Okay. one of those two sell scenarios. But that can take it can take a while. It can take about an hour and a half for that to play out. Because as I said, today is the interest rate decision in the second half of the NY session. So things might be slow. The first half of the NY session, first 3 hours of NY Open might be slow. You might not have a lot of volume coming in. Okay, so that's the analysis. That's basic the prep work, and that takes about 25 to 30 minutes, right? Once we go through this process. So the process is basically the process that sorry. Just give me a second. Yeah. So this is the process that I follow, right? Um, I look for key areas on a price chart where I believe the price moves to those areas to find liquidity, right? And once it collects enough liquidity at a certain area, then it goes in the opposite direction, right? And that's all that price does every day, every week, right? So if you're a session trader, those areas are uh, 4-hour supply demand zones. Now sometimes I refine them on the 1 hour, but they're mainly 4-hour supply demand zones. And then once I draw these zones, I identify high liquidity zones. Out of those zones, I see which ones are high liquidity zones, right? So basically, to do that, I check if a zone has taken out an opposing zone. If it has, then that's labeled as a high liquidity zone. Then within those high liquidity zones, I look for a high liquidity candle. So basically, it's a volume candle that I'm looking for. So if it's a demand zone, I'm looking for the largest bullish candle. Starting from the 1 hour time frame, I go down all the way up to the 15-minute time frame, sometimes even the 5-minute time frame, to look for that candle. And that candle, 80% of the time, is on the 15-minute time frame. Sometimes on the 30-minute, and sometimes even on the 1 hour or the 5-minute. But 80% of the time, you'll see in that candle on the 15-minute time frame, like you did today. The rest of these are almost automatic by the indicator that I use. So these BRNs, or the big round numbers, the psychological round numbers, are automatically um, shown by the indicator. The weekly SR levels are done manually, but those levels will last months, right? Sometimes even a year or more, right? Um, those weekly SR levels, there are levels that I have drawn on my chart. These levels going back to early 2024 or even end of 2023. And they're still there on the chart, right? So these are, you can take a screenshot of this and you can add these onto your chart if you think they're helpful. And you can see how price reacts to these weekly SR levels, right? I call them SR levels because there are support levels that turn resistance, and there are resistance levels that turn into support, right? Um, and basically the way I draw them is I look at the number of touches. So on the daily time frame, I need to see at least 2 touches or more, right? The more touches you have on a daily time frame, the better, the stronger the level is, right? So we have this new level that has formed here, 29.79, which has only a single touch, right? So we're going to have, that is, I call those lines temporary lines, because those lines, once if price comes and reacts to it again here, then that'll be set permanently on my chart. But until I see that happen, that line may move um, $5 to $10 up or down, right? So $5 to $10 means about 50 to 100 pips up or down, depending on where the touch is. But these lines, more or less, you can see the number of touches. This 29, 29, the level before that, how many times we touched it. So that's a permanently placed weekly support level or a weekly SR level. And the same goes for these lines below as well. You can see how this was drawn. This line was drawn 2834 when this touch happened here. That was on the 6th of February. And then almost 3 weeks later, we tapped that line to the pip, and I did take a trade there as well. I remember there was a high liquidity candle there. I remember taking the trade, and look how far we moved from there to over 2,000 pips and heading to 3,000. And that's this move up we've been anticipating since the first week of Jan. I've been saying that we're heading towards 3,000, but now we are heading higher. Okay, to get back to what I was saying, those weekly SR levels are areas of liquidity. And the fourth and the fifth are the EMAs that again are automatically drawn by the indicator. Now, number 5 is not very important because you don't see this happen during the NY session. But if you're an Asian or London session trader, then that might be important for you. So it's basically if price pulls back to any one of these EMAs, those are areas of liquidity as well, right? Where price grabs liquidity from those to either push up or push down, right? So that EMA there and that one there. And then where the EMAs cross. So let me see if I can show you an example. All right, so that's a cross, right? Now this price very rarely price will touch that cross. Like you can see in NY session, it didn't. It moved away from it, right? But sometimes in the London session, you have a cross and you have price touch that. I think this was one of those examples. This is the Asian session. Yeah, you have a cross here and price touched it in the Asian session and it moves straight down, right? So that's what I mean by point number 5. It's where the cross happens. That's exactly where the cross happened. Price comes back, pushes down, touches it, and then pushes down, right? But that almost never happens in the NY session, so you don't need to worry about point number 5. But it's basically supply demand zones, psychological round numbers or BRNs, weekly SR levels, and the EMAs, right? Those are the main areas where I look for liquidity. Now there may be more. I don't know about that, but these are the 5 areas that I look for to find liquidity on a price chart. Okay. So we're still pushing up. There's nothing to do here. Prices has broken the high here. We're heading higher, probably. And it's slow, right? So if you look at the 15-minute candle, the 15-minute candle is just about to close. Yeah, it's just an 18 pip candle. There is literally no volume right now. If you look at the one before that, that's like a 17 pip candle. This is the 18 pip candle. There is no volume, right? No volume at all. This is a 20 pip candle. There's no volume at all. Pre-NY has had no volume. This is the pre-NY session. That candle was 25 pips, 37 pips. Yeah, so volume is dying. No volume at the moment. So, and this is kind of expected because when you have a big news event in the second half of the NY session, the first half, you'll get a lot of volume in the Asian and London, like we saw. If you go back and look at the charts, if you look at the days where you have the interest rate decision and the FOMC meeting minutes, you'll see majority of the time, 90% of the time, you'll see that the London session and even the Asian session has a lot of volume. And then the first half of the NY session has very little volume. This happens 85-90% of the time. There is some cases where you do have some decent volume in NY session in the first half of NY session as well, but more often than not, it's the first 2 hours of the NY Open is quiet, and then volume will possibly come in with the NYSE Open. You might have so at around 9:30 a.m. EST, you'll have volume come in, which is in about an hour and 15 minutes from now. You might have volume come in then. So that is why I said it might take some time to see structure form, to see what I visualize form. So I'm looking for a tradable 30-minute candle to close, either here, close below the Asian low, the Asian high, sorry, to close below the Asian high, or for price to push back up to continue higher, create 30-minute resistance, and a 30-minute tradable bearish candle to close to take the sells to come down, right? Right now there are no buys because we are in supply. For buys, I would want to see price come down, create 30-minute support, um, and a tradable 30-minute bull candle to close to take the buys to go back up, right? That's what I want to see for buys. But that's going to take a while for that to happen. Okay. Yeah. Feel free to ask any questions related to what we've discussed so far. and I'll do my best to answer. You got to wait for this 30-minute candle to close. There's a lot of time. There's 8 minutes for the candle to close, so it could close bearish or go back up and close bullish. There's a lot of time. Hmm. Yeah, 5 minutes more for the candle to close. Let's see. It's likely going to close the doji again, just like this candle. There isn't volume. Yeah, it's 29 pips. There's no volume. Yeah, there's no volume. Yeah, I'm going to be here for another 30 minutes because I don't think we're going to get a lot of volume today. At least not right now. Not for the next hour or so. Things might be quiet. NYC open, maybe. Yeah, in about hour and a half, you might have volume come in, a little bit of volume come in. But right now, there is nothing. There is no volume. Look at those 15-minute candles. 29 pips. This candle is just about to close. This was under 20. All of these are under 20. Right, 20 pip candles. And that's not what volume looks like. On for gold, volume is when you have like a 15-minute candle that is above 45 pips, 45, 50, or even higher than that. That's when you know that volume is going to come in. Once you see candles that are above 45 pips, above 50 pips, 15-minute candles, that's when you know that volume. There is possibly volume in the next couple of 15-minute candles, and that's what you want. You want volume in a single direction to get you, um, to get you in profit, to start you in profit. 30 seconds more for the candle to close. We are closing bearish though. Yeah, if we close like this, I'll take a trade at the Asian high if we get there, right? But it's going to be a wide stop loss of about a 50 pip stop loss and anticipate price to come down. So on the 15-minute time frame, if we've closed, yeah, let's place a trade there. This high is 39, 45, 39. Yeah. So right at the Asian high, I've placed a pending order. If we trigger there, stop loss will be above the liquidity candle because we're inside the liquidity candle. Doesn't seem like we're coming up. Yeah. Yeah, it's got to come up here. to get a trade to come back to the Asian low. It's about a 100 pip move, but it's got to come back to the Asian high. I'm not willing to take a trade otherwise. Stop loss would have to be up there. Yeah. So 30 pip candle is still still not enough volume. The only reason I took this trade is because it's a reaction at a liquidity candle. We have a 30-minute bearish candle close, a tradable bearish candle close below the Asian high. Like I said I'm visualizing one of two scenarios. So this is the first one. We form 30-minute resistance, and we have a 30-minute bearish candle close below the Asian high, right? So, but I want to pull back. I want price to pull back to get in on that trade to the Asian high, at least the Asian high, because I don't want to have a very wide stop loss. So this, if we get up here, then it would give me about a 50 pips or 55 pip stop loss if we get up there, and then push down. So we're going to wait. Honestly, I don't like taking trades on the interest rate day, on the trading the first half of NY session on the interest rate. I don't like trading that, because the big move is to come. Okay, we're pushing up. See if you get triggered. We should come up. Yeah, we should come up pretty easily. There we go. There we go. See if we come up higher. 64, 45. Place another pending order here. 30.09, 39.5, roughly 39.6 or 39.5. Place another pending order there. Stop loss, as I said, is above this high here, above the 30-minute candle high here, this one here. That's a liquidity candle, and it's above that high. And your TPs are roughly around the either second EMA here or the Asian low. So to be precise, this is where you want to take partial TPs at 30.30. Yeah, perfect. Let's see what happens. 30.30 and then 30.28. 44.73. That's your stop loss, 44.73. So it's about 50 pips and 55 pips on these trades. Yeah, about 50 pips here and 55 pips for the next one. Hmm. Okay. Place another pending order here. That has about a 22, 23 pip stop loss right at this supply zone here, rally, base, and a drop right there where 30-minute resistance is. That's 30-minute resistance right at the top of that. Okay. And anticipating price to come down to 30.30, 30.28, 30.26. Sorry. Da, 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 da. Now the reason why the stop loss is not above this candle here and why it's above the liquidity candle is because price can come as many times as it needs to into a liquidity area, into a liquidity candle to grab liquidity, right? So if there is a liquidity candle, if you have a reaction at a liquidity candle, if you're trading from a liquidity area, from a liquidity candle, then the safest stop loss is for sells is above the liquidity candle high and for buys below the liquidity candle low. I've said this many times, okay? And that's the reason the stop loss is there, 3044.73. So once you break that high, then that's no longer valid. Sells are no longer valid, and you can close the trade. I've kept mine a little bit high for spreads, but once we tap that, then I'm going to close the trade, right? And we're anticipating price to push down to 30.30. That's closer to this EMA. There's also 15-minute. On the 15-minute time frame, we have support right there. You can see price, you can see the taps here, right? So there is support right there. So that's 30.30. That's the first area. Because once you break below this, we have clean space to come down. Once you close below 3034.5, we should drop easy another 50 pips down, right? And then the next is just above the Asian low, just above the Asian low, which is 3028. And then if you continue to drop, we might drop to 3026 or even lower to the London low, right? Okay. Now, as I said, I'm going to be here for another 10 to 15 minutes more because things are slow. This might take a long time to develop. That's the reason I placed just two very small orders. And how I'm going to manage risk basically in this is I'm going to let this come in, right? Price might come back in, come deeper in. But if we have a 30-minute close, a 30-minute bull candle close above this 30-minute resistance, this is 30-minute clear 30-minute resistance, right? You have you have a bull candle, and then you have a bear candle after that. So if we have a 30-minute candle close above, a 30-minute bull candle close above um, 3042.5, right? That is 32, roughly 3042.5. If you close above that, then you can manage risk. You can close 75% of your position, right? That's how you manage risk on this trade. If you don't have, so let me put a line there just to. Okay, so a 30-minute candle close above 3042.5, you can close about 75% of your position if you have a 30-minute candle close, 30-minute bull candle close above that. If not, you hold it for price to reverse and come down. Okay, so that's the trade for the first hour and a half or 2 hours of the NY Open. Now, I still believe we are bullish. We're very bullish, right? Because daily is bullish, 4 hour is bullish. We're pushing up. The weekly is also bullish. So I believe that later on we are going to um, we're going to push up after a pullback down during news or just before news. We push down and then we push up for news. FOMC meeting minutes, that is 30 minutes after the 30 minutes after the interest rate decision. I think the direction is going to be up. We're going to continue to push up towards 30.50. That might even happen now, right? So that is why we have a hard stop loss, and that is why we have 3042.5 marked here. Because if you have a bull candle closed, if this 30-minute candle that closes in 13 minutes, if it closes above that, then you can cut all your positions, or you can cut 80% of your position, right? That's the reason for these levels and the stop loss to manage risk and to keep your risk to a minimum, so you don't lose your full risk. Yeah. Yeah, so yeah, 10 minutes. Um, yeah, I'm going to wait for the 30-minute candle to close, and then that's about 12 and a half minutes from now for the candle to close. And after that, I will end the stream. And but just like I said, that's the stop loss, 3044.73. That's the hard stop loss. But whichever comes first, if price goes straight up now and hits that, then the the cells are not valid. Uh, or if a 30-minute bull candle closes above 3042.5, then the cells are, then you can close 75 to 80% of your position. Okay. Anticipating 3030, 3028. It's about 120 pip drop down if we get it. If we get it. There is still no volume. This is a 40 pip candle. It's gradually increasing. This is a 30 pip candle. The previous candle was under 20 pips. This is a 40 pip candle. Let's see. This candle has another 11 minutes to close. This candle has just started. So let's see. This made 19 pips already. Okay, I'll be back in about 5 minutes. It's got some time. Got to wait for about over 10 minutes, almost 11 minutes for the candle, 30-minute candle to close. Let's have it here. Let's see what happens. This 4-hour candle has no top wick. It's got to be careful. This 4-hour candle right here has no top wick. So price can easily push up, maybe now or maybe later on. Push up above that to grab liquidity. There's no top wick above this candle. 1-hour candle, no, same candle, no top wick. 30-minute candle. We are pushing down though. We are pushing down. Still no volume though. Not enough volume. Just 36 pips and a 4 minutes move for the candle to close. Let's see. Candles for volume to anticipate, for us to expect volume, anticipate volume. 15-minute candles need to do about 45 plus pips, above 45 pips. Yeah, I'm going to be here for just about 3 minutes more and I'll end the stream. Okay, so this is the cells that I've taken. I've explained very clearly why I took the cells. Again, just to summarize, I was waiting. We had 30-minute resistance form. I was waiting for a tradable 30-minute candle to close below the Asian high, which it did. Waited for the pullback, took the trades up here, one at the Asian high and then one a little higher around 2039.7 roughly, or zero point 0.8 I think. And then there's another entry up here, right? The stop loss for this trade is above the 30-minute candle high. Because that's the liquidity candle and price can come as many times as it needs into the liquidity candle to grab liquidity to push down, right? If there is not enough liquidity here, then it will continue to go higher until it finds liquidity. Once it finds enough liquidity, then price will reverse. That's how price moves. In terms of managing risk, if a 30-minute candle closes above 3042.5, I will close probably all my positions, or yeah, probably all my positions. The TP levels are here 3030, 3028, 3026, or even lower, which is the London low, which is about 3023, right? That's a London low if we get there. Those are the TP levels. Let me put one here as well. 3023. Okay. If we get there. We're still closing bullish. I think we should close bullish here. A bull candle here, probably a doji again with no. Whenever you have a doji on a particular time frame, then on that time frame, keep in mind that there is no information on that time frame, on the time frame that you see the doji, right? So, but if you go up down to a 15-minute, that there'll be information on that time frame, on the 15-minute, because it's a different time frame. But on the time frame that you see the doji, if you see a doji here, then there's no information on that candle. Then we still have to work off this previous candle, which is the 30-minute close below the Asian high, a 30-minute bearish close, right? It's very likely that we're going to close a doji, very likely. Just 20 seconds for the candle to close. We should close a doji. Now, in terms of trades for later on, we might have, it's very likely that it's going to be buys, right? For later on, for the interest rate decision and the FOMC meeting minutes, because the trend, the high time frame trend is bullish, very bullish, heading towards 3050. So that's probably where price is going to go to today. So we're going to probably push down to grab liquidity and then push back up. So if you want to take buys, okay, this is the sell idea. The trade that I've taken is the sell idea. I'm not giving out any more sell ideas. But if you want to take buys, if you are trading during the interest rate decision or the FOMC meeting minutes, either of those two news events, those are 30 minutes apart. If you're trading at any one of those news events, wait for 30 minutes support to form and a 30-minute tradable bull candle to close to take your buys, right? So before the news event, price can pull back down, create a 30-minute support and 30-minute bull candle can close, and then you can take your buys, right? And make sure that that happens at one of these liquidity areas that I've mentioned, right? So you have the EMAs, you have the liquidity candle, and then you have another liquidity candle below here. So it has to happen at one of the 5 liquidity areas that I've mentioned, okay, to go up. All right. So that's it. I'll be back tomorrow, 7:30 a.m. EST, and we'll see what happens with price, with news today. It's a big news event, right? Let's see what price does during the news event, especially during the FOMC meeting minutes. That's when you will have, that's what creates, what gives information, what puts information into the market that changes the direction of price, right? So especially wait for the FOMC meeting minutes, because that's when we will have a kind of direction. And we will have a trade tomorrow for sure. 100% we should have a trade tomorrow. So don't worry if you miss the event. If it's outside your trading hours, don't worry about that. We will have volume tomorrow, especially after FOMC. We will have volume tomorrow during the NY session, and very likely price will head in the same direction, right? So if you look at tomorrow's news events, tomorrow we have unemployment claims, right? Perfect. We have unemployment claims at 8:30 a.m. EST. Unemployment claims at 8:30 a.m. Now that's not an important news event, but the reason I'm highlighting it is that once the FOMC meeting minutes gives direction to price, unemployment claims will add volume to that same direction. So price will just add volume to that. Okay. All right. So see you guys tomorrow 7:30 a.m. EST. Take care. Have a safe evening. Don't overtrade. Don't over risk.